Hi everyone, thank you for tuning in. I'm Andrew and it is October 25th, 2023. And today we're going to be going over buying a home and getting a mortgage in today's market with interest rates, how they are. If you've heard recently or seen from a lot of different sources, interest rates on mortgages are very high for recent rates. So we're going to talk about what that means and what it would be like to buy a house right now in this market. So in general, when interest rates rise, the housing market slows down. When interest rates rise, consumers want to hold off buying right now because they want to wait for them to cool off. So when the rates rise, the cost of owning a home also goes up due to the higher rates because it costs more to pay down that loan. And this decreases demand, so people do not want to buy right now compared to with lower rates traditionally. And so a decrease in demand a shift inward in demand or a decrease in demand will decrease the price of homes. So why then are home prices still so high? Partially because of remnants of COVID. Throughout 2019 to 2021, there were just residually increasing home values. And another consequence of high rates is an unwillingness to sell among existing homeowners, because the homeowners that own right now don't want to sell only to go back to the market to rebuy their new home at the current high rates. So you have two opposing forces right now. You have demand decreasing, which lowers price, and you have supply decreasing, which raises price, because we know if something's rarer, when something's not supplied a lot, right, then it's more expensive. But these rates right now, I just Googled the 30-year fixed rate and it's hovering around 7.5%. So historically, that's not super high. Like for our country, it's just high as of recent years. And just this first week of October here, a couple weeks ago, Fannie Mae put out something saying the average 30-year fixed mortgage rate at 7.49%, so basically 7.5, was the highest it's been in 23 years. So there's the number, 23 years. And on a fun little side note, interest rates skyrocketed in the 80s and peaked just north of 18%, which makes today's rates look way more manageable. And historically, rates had been coming down ever since coming down until January 2021. Basically, when the Federal Reserve hiked rates that dropped as low as 2.67, that's where they got down to. And then they've gone up quickly over the last 2.5 years, almost 300%, or about 3 times as much. But back to interest rates today. So buyers are holding off now, which means they'll have to buy sometime in the future, where they'll face competition from all other people who decide to hold off as well. And rates are not the only thing holding off consumers. Prices today are just generally high because they rose during Corona. They only settled back down in some markets, whereas in others, they're still at all-time high. And believe it or not, prices are not expected to be done rising yet, according to real estate articles I've been reading online. So they're just gonna go up. They've always gone up in history. So who's buying right now, and why would you buy? And why would you wait? So those who choose to wait to buy until interest rates cool off will be joined by everyone else in the market waiting. And basically there's going to be a ton of competition. So currently we have decreased demand, decreased supply. In the future, when the Fed drops the rates, that's going to flood the demand gates. People are going to be buying like crazy. So that in turn is going to raise price. Think about high demand of something. You can charge more if people are demanding it. So home prices are going to go up in the future when interest rates drop. And when demand increases in the future, the law of demand will basically say home prices will go up too. Here's the economics of it all on a graph. Oh, before we do that, I just wanted to point out, since real estate will always be increasing in equity, for those who decide to buy now, even though prices are higher, right? Rates are high, but in the future, when rates drop, prices are going to boom out even more, unbelievably. So for those people that are buying now, they can always, with good credit, refinance in the future, capture that increased equity, the benefit of the future equity, which will happen, and then they can also refinance to that lower rate in the future. And here's the economics of it. on a graph so we can see visually kind of what's happening. So right now we have the market for homes at D and S is going to be equilibrium. So this is the place where supply and demand like to meet. This is suppliers or home sellers and people that want to buy. Now, when we say demand decreases because of interest rates, we're going to shift demand left to the D1 line. So we see that Q star and P star used to be our price and quantity where supply and demand met. Now when we shift demand inwards, it's going to lower overall price, and then we're going to shift supply. I know it looks like you're raising it because we're going up for those unfamiliar with econ, but we're shifting it left. So along the quantity, we're actually getting, we used to have supply here, and now where our new supply line hits our new demand line, we can see that we have a net overall higher price and a lower quantity. So people in the market right now are willing to pay historically high prices even though there's low volume or low homes to choose from, okay? So in the future, demand's going to flood back out. Supply is going to increase as well. Sellers are going to be relieved that the rates are dropped because they can go and rebuy at a new low rate. They're going to start selling. But this D line is going to flood, right? And increased home values can be expected. We see that the gap between the shift in demand and the shift in supply are different. So the demand, I drew it on purpose to show that it shifted in marginally, but supply restricted even more. So that's why we ended up with a overall lower quantity here, okay? So in the future, basically demand is going to flood out, increasing the home value or increasing the price. Yes, we're going to get pushback from the flood in supply, but historically real estate continues to grow in value. So if you buy now, for those people that buy now, you're going to capture future equity. You're not going to be in competition with all the buyers in the future. And then you can just refinance at that new rate with good credit in the future. So there's one way to do it. Great credit opens lots of doors. There's more than one way to shear a sheep. So good luck with what y'all got going out there, guys.